For the past several weeks, Bitcoin has been crashing. That was until yesterday morning, when Jerome Powell delivered a landmark presentation at Jackson Hole that said the Fed might be pivoting frameworks, that the current conditions may warrant interest rate cuts. Is this the moment right before we smash through all-time highs again? Today, we're going to talk about the implications of Jerome Powell's words and what it means for Bitcoin's price going through the rest of 2025 and beyond. The printer is coming. This is Dante Cook with Bitcoin Simply. Let's go.
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
When Jerome Powell made these comments, Bitcoin absolutely exploded, going from 112K to 116K in a matter of minutes. And it wasn't just Bitcoin. It was the entire market, as the Dow and the S&P 500 made or were at all-time highs, and the VIX dropped over 12 percentage points. But if we review the tape, nothing that he actually said was that remarkably favorable. But still, Bitcoiners are going to take their W's whenever we get them, regardless. Gotta love Jameis Winston. Uncle Rome is between a rock and a hard place. Employment risks are rising, with inflation numbers rising and payroll set to be revised down between 35 and 50%. In fact, Goldman Sachs believes that 1 million jobs are going to be revised this year on the payroll number, which means the labor supply is softening, and we're just now beginning to see the impact of the tariffs on prices, which Jerome Powell indicated is flowing through the majority of service goods and other essential goods that we need that are calculated in the CPI. That's somehow below 2%. If he lowers rates, the things that were unaffordable for most Americans these days, like homes, are now going to become even more unaffordable. Private equity and commercial lenders are going to offload all of their bad debt and all of their bad companies that are stuck with paper valuations onto holdco bros and search fund bros graduating from Harvard. Employers are going to have to pay employees more, and they're going to get squeezed even more, as their profits are eroding at a faster clip than we've ever seen. But if he doesn't lower rates, everything continues to stagnate. That's what they call stagflation. But if they do print, well, things get out of control. And this is just pointing out a simple fact that we all know, and especially if you subscribe to this channel, this system doesn't work. I mean, take a look at this. Stocks are at all-time highs, home prices all-time highs, Bitcoin all-time highs, gold all-time high, money supply all-time high, national debt all-time high. The CPI inflation, 4% since 2020, 2% above their actual target. And the Fed is going to cut interest rates? Make it make sense. And this is why stablecoins are even a thing in the first place. People are talking about, why do we need stablecoins? We already have payment systems. It's because stablecoins are a mechanism through which the United States government can fund their fiat Ponzi. This is why senators like Cynthia Lummis are saying the market structure bill is going to get done this year.
We go back to work in the Senate on September 3rd. We are working market structure with the goal of having it out of the Senate Banking Committee by the end of September. And then the Ag Committee, the Senate Ag Committee, hopefully will work their part of it, the Commodity Futures Trading Commission part of market structure, through the month of October. And we will have market structure to the president's desk before the end of the year. I hope it's before Thanksgiving. So that's our goal. So we will have market structure done this year. And
Preston Pish explains the dilemma that stablecoins solve beautifully. They take all of their extra coupon payments and sweep them into Bitcoin, risk-free.
They were tripping over themselves to pass the Genius Act. And you have to ask yourself, why? Why were these politicians tripping over themselves to get this thing passed? And the answer is really simple. They needed a buyer for all of their debt. And the buyer is the stablecoin issuers. And it's really kind of interesting to see how that all really transpired and really kind of came to a head is, the government had to start issuing shorter and shorter duration paper because there was no buyers for anything that was long duration because there was so much inflation risk. So they're down there like issuing like 1 month money. And it's like, well, who's going to buy all this 1 month money? Well, you know what? The stablecoin issuers literally, like, they love that because they can back everything. They can gobble up all this new issuance. They don't have the inflation risk that if they were buying 30-year paper, they don't want that inflation risk because they don't know if it's going to be fully backed, right? Or they'd have to keep rolling it to try to like manage that. But if it's really short duration, it's actually perfect for them. And then the really smart ones, what are they going to do with all the coupons that they're receiving? They're just going to sweep it into Bitcoin. And then it's really backed because that thing's going up at 40 to 50% annualized. It's like extra over collateralized. What I find so interesting with all of this is you literally have BlackRock and all these other banks that are playing a fractional reserve game. They don't even have what they're issuing in the vault. But yet you have a company that's fully collateralized with extra Bitcoin in the vault, and they're making more profit than the ones that are playing the Ponzi game. And they're getting the issue like literally from thin air, and they're making more money than them. If that doesn't show you like the natural market forces that nature is trying to heal itself, I don't know what does. Because it's miraculous to me that you can have something that's over collateralized just whipping the pants off of the ones that are literally cheating as if it's a total Ponzi scheme.
And this all points to the fact that the train doesn't stop. It can't stop. The fiat money system is sort of like a shark. If it stops swimming, if it stops creating debt, it dies. And that's why Bitcoiners celebrate Infinity Day, which is just a simple symbol or a simple formula, which means there's an infinite money supply going into a fixed supply asset. And this is why Bitcoin is the only opportunity out there right now. Here's why smart investors like Bill Miller believes that we're just getting started on Bitcoin becoming the global reserve currency in the world that all excess capital will flow into.
I think Bitcoin is going to ultimately be one of the major, the premier source of collateral globally. Replacing the dollar, replacing every other reserve situation. If you think about what money's meant to do, it serves those roles so much better. What you'll see over time, I think you're going to see the volatility come down over time.
And so I do believe that Jerome Powell's comments, when you combine them with the M2 growth, which is just going absolutely bonkers, not only in the US, but globally right now, and you compare to where Bitcoin is relative to where it's been and how its price reacts in other cycles, well, it looks like this 110K range may be the new floor, and that all-time highs, the 150K, 175K, that other analysts and people have predicted on this channel are actually around the corner between now and the end of the year. There's not a lot of negative catalysts out there for Bitcoin because if the market gets bad for the real world and they do in fact cut rates in print, well, Bitcoin goes to the moon. So if Bitcoin is going to the moon and it is what people say it is, do you want to sell the best asset for an asset that is becoming worth less over time? Well, you don't have to. You can actually unlock liquidity from your Bitcoin without selling your Bitcoin. Never sell your Bitcoin. Work with a partner like Ledn, who's been the leader in Bitcoin-backed loans since 2018. They've issued over $9 billion worth of loans to tens of thousands of customers. And the average time it takes just 2 minutes to apply, and for fiat to get into your account is just 6 hours. The process is smooth, simple, fast, and transparent, with an easy-to-use dashboard for you to check your loan-to-value ratios and what capital you need, if any, to put into the platform at all times. Get started by going to learn.ledn.io/simply. Don't sell your Bitcoin. And if Bitcoin is becoming the most valuable asset in the world, well, it would make sense that you learn how to protect it properly. We have all sorts of protections for things that we deem valuable in our lives already. So why not Bitcoin? And with that, there's typically an advisor or an expert or someone to help you to protect it properly. Well, we have that too. It's called the Bitcoin Way. Members of their team, their coaches, will walk you through how to take self-custody of your Bitcoin, how to protect it, how to run nodes privately, how to manage your private keys, how to share this information with family and friends. Schedule a free 30-minute consultation with a coach from their team at thebitcoinway.com/simplybitcoin. Back to our show. Here's how people like Jack Mallers are thinking about this. And I mean, he's got a pretty good vantage point as the CEO of Strike and the new 21 capital. How does Bitcoin play out relative to the $500 trillion or $900 trillion of capital that is being stored and used as a savings vehicle in other asset classes already?
I fundamentally believe Bitcoin is the only opportunity in this marketplace, and that'll continue to be proven out. The way that we conceptualize Bitcoin at both companies is $100 trillion worth of wealth, and we're just trying to take it with us tomorrow. To me, that's Bitcoin's opportunity to take, because you really shouldn't own a basket of real estate not to live in, but to save in. That's not the point of that market good. And so to think of these other cryptos, we don't get distracted, because if you were to give Ethereum credit that I don't think it actually deserves and say, oh, it's actually disrupting Apple or Amazon, I don't know, it's hard for me to keep up with the narratives, but let's make that assumption. That's a $2 to $3 trillion opportunity according to the market today. So I do think that at a point in crypto's journey and life cycle and story, it was questionable if you could build a high margin, high growth, cash generating business on Bitcoin only. And if there was the opportunity and the margins and the upside to just focus on this one asset and see through what I think the forest for the trees, which is this $500 trillion opportunity in today's purchasing power terms. And so I think that the market, we're starting to prove that. And I would just encourage the room to not equate Ethereum and Dogecoin and Bitcoin not only as the same, but like remotely similar. I think even if you give each of them the full benefit of the doubt, one can solve half the world's problem and the other might replace, Amazon or something.
Yeah.
The picture looks pretty good. And here's the crazy thing. People like Alan Greenspan have gotten it into people like Jerome Powell and other boomers and other unelected leaders' heads that we can't default as the United States. If we create the currency, well, we can just print more of it. There's no such thing as debt or bad debt.
Are U.S. Treasury bonds still safe to invest in?
Very much so. I think this is not an issue of credit rating. The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.
We all know that this isn't true and that there's always consequences. You reap and you sow. And we're reaping a whole lot of destruction for future generations and people that are coming after us as we continue to inflate the prices of asset classes that we need to live in. Real estate is not a good investment class only because of the fact that it's a utility asset class. If Jerome Powell does in fact lower rates, well, the people who are already hurting are going to be hurting even more. Unless they have Bitcoin. Bitcoin is able to take any excess liquidity or savings and wrap it in a fixed supply savings technology that is outside of the existing system that we don't need for utility, like to live in. I'm not going to give you investment advice, but there's a great chart from Andre, the head of research at Bitwise, where he shows your likelihood of having a negative outcome depending upon how long you hold Bitcoin. Let's take a look at the chart. If you hold Bitcoin for 1 day, your chance of loss is 46.9%. 1 week, 44.3%. 1 month, 42.2%. 1 quarter, 36.5%. 1 year, 23.5%. 3 years, 0.7%. 5 years, 0.2%. 10 years, 0. The simple investment advice from this chart, and I'm not giving any investment advice, it's just HODL. Hold the best asset and have a long-term horizon and perspective when you think about when and how you're going to sell, which should be never. Jerome Powell probably just signaled the floor for Bitcoin's price moving forward this year. We're going after a $500 trillion opportunity, and we've got a long time to absorb more assets in a system that is breaking right in front of our eyes. Keep it simple. Don't overcomplicate the trade. One of the ways that you can continue to level up on your Bitcoin journey is by investing into your Bitcoin education. One of the best ways you can do that is by coming down and meeting Bitcoiners in real life. And one of the best conferences that are really fun to go to are the mining conferences. The Mining Disrupt Conference in particular, the largest Bitcoin mining expo conference in the world, where you can see the makers, machines, and people behind the infrastructure that runs the Bitcoin network. Get 20% off your ticket by using the promo code SimplyBitcoin. I hope you got some value out of today's episode. And if you do, please do like and share. And if you haven't already done so, subscribe. This is Dante Cook with Bitcoin Simply. Happy stacking.